a worksheet. So a couple of things before we get into the worksheet is we have another gap rule here, the generally accepted accounting principles. And this one is consistent reporting, which basically just says that you have to record all of your accounting information the same way every year, every month to month and year to year. And that's because you can't really compare financial data from one fiscal period to financial data from another fiscal period unless they are recorded the same. So consistent reporting is really, really important in a business to make sure that you're doing everything consistently the same way year to year. And so a fiscal period, I mentioned that a minute ago, and we've talked about this before, but a fiscal period is a length of time that a business uses to summarize their financial data. Typically, it is going to be a 12-month consecutive months. It is not always going to be January to December like the calendar year. Sometimes it's July to June. And so, for instance, a school district uses a July to June fiscal period. So the new data for financial data for a school district starts over on July 1 and goes through July 30th instead of January to December, because that fits better with the school year. So a fiscal year is just that 12 months consecutive, but it does not have to go January to December. So keep that in mind. So here is our accounting cycle that I've been bringing you back to as we go through the year. So we started out at the very beginning of the year analyzing transactions. So you take those transactions, you analyze what two accounts are affected, how are they affected, are they debited or credited, increase, decrease, all of those questions that we've talked about with each transaction. And you're getting to the point now where those things are starting to become natural. You just remember them. You journalize them. We put them in the general journal and we decide how they're going to go in there, debit first and then credit. Then we post them to the ledger. Posting to the ledger brings the accounts up to date so that you have in that one place in the ledger where you know what your running balance is in every account all the time. What we're going to do now is go to step 4, which is prepare a worksheet. Here's the good thing. We've been through 5 chapters, so the worksheet is chapter 6. We really only had 6, 7, and 8 left to end this accounting cycle. So all of these fall in chapter 7 and 8. So it goes a little bit faster here. So we're going to work on preparing the worksheet today. So what the worksheet is basically just a form, looks a lot like a spreadsheet, that accountants use to make decisions. So you start out first by taking every general ledger account, whether you have a balance or not, and you list it on the page. And I'll show you a picture here in just a minute. And then you put the balances in there. And you add those columns up, and the point of that is to make sure your debits and credits are equal. Because at that point in time, if you don't have equal debits and credits, you have to go back and find where your errors are. Then it's going to help you plan changes to those general ledger accounts, which we'll talk about more in the next lesson. Then you separate them out into financial statements. Again, we'll cover it in a following lesson. And then you determine whether or not you had a net income or a net loss. So this is what a worksheet looks like. Step 1 is to do your heading, which we're going to talk about in just a minute. And then step 2 is to list every account in your general ledger in order. Notice we have our assets first, then we have our liabilities, and then we have our owner's equity, and then that income summary account, which we haven't used yet, but you're still going to list it on here. Then our sales, which is our revenue, and then all of our expenses in alphabetical order. You just list them. You list the balance that the general ledger account shows. You add them up and make sure that they equal. That's step 1. That's what we're going to cover in this chapter. So the heading is always going to be a 3-line heading. It's always going to start with the name of the company on line 1, the name of the report on line 2, and then the date. Now, since the worksheet covers information from the beginning of the month to the end of the month, it's going to have the words for month ended and then the last day of the month. This one happens to be January 31st. If it happened to be February, it would say for month ended February 28th. So it just depends on what the month is. So that 4-month ended tells us that it covers information from the beginning of the month to the end of the month. And these should be centered on the line of the worksheet. So if you go back and look at this, they're centered on there. Then you're going to write the general ledger account titles in the account title column. And then you're going to fill in the debit and credit balances in the trial balance. Now, if you want to do cash and put the amount in, and then petty cash and put the amount in, that's fine. However, that works best for you. Then you're going to roll this single line across the bottom here. That tells us that we need to do some calculations. And then you add them up, put the totals in there, and make sure that they are equal. And then if they are equal, you do a double line. The double line in accounting tells us that everything balances out. Now, if these don't balance out, then you got to go back and look through all of your ledgers and make sure you copied the amounts down right correctly. And if you did, then you're probably going to have to go back through your journals and look for transactions and try to figure out where your errors are. And that is the end of lesson 6.1 for starting how to do a worksheet.